Welcome, everyone. I am absolutely thrilled to have you here for today's explainer. Because honestly, we are about to tear down one of the most common, yet literally one of the most destructive financial myths out there. Today, we're shattering the illusion of affordable car ownership. We're going to look at the hard data, the hidden math, and the psychological games that just keep people strapped for cash, month after month, year after year. If you've ever felt like your paycheck just kind of vanishes into thin air, or if you're planning to upgrade your ride anytime soon, well, you absolutely need to hear this. Okay, let's dive into this. Are you buying a car or are you buying a trap, right? Because so often we walk onto a dealership lot completely blinded by horsepower, shiny leather seats, and yeah, that intoxicating new car smell. But we fall totally victim to the illusion of the affordable monthly payment. Dealerships are absolute masters at this game. They'll stretch a loan out to 5, 6, or even 7 years just to make that monthly number look small, totally hiding the massive financial anchor they're tying around your neck. You think you're buying freedom and mobility, but financially, you might just be buying a cage. One of our sources actually puts it incredibly bluntly. Car buying is the place of one of the most trickeries that people will do on you to trap you into very bad situations. And guys, this isn't an exaggeration. Think about the dealership finance office for a second. You know that little windowless box in the back? The entire process in there is literally engineered to manipulate the numbers. They force your focus entirely onto that one single monthly payment, completely obscuring the total cost of ownership. They definitely don't want you looking at the interest rate, the loan term, or all those hidden fees. They just want you to nod and say, yeah, I can afford $500 a month. It is calculated trickery, plain and simple, designed to keep you paying way more for way longer. And here's the brutal mathematical reality of all that trickery. Transportation drains 15 to 20% of your annual income. I mean, just let that sink in for a second. For the average young professional today, right after housing, your car is likely your biggest expense. It's a massive wealth drainer. Think about it like this. A fifth of all the hours you work is going straight towards the metal box that just gets you to the job. You're basically working every single Friday just to pay for the wheels you used Monday through Thursday. If we don't get this specific category under control, building real lasting wealth becomes mathematically almost impossible. To really understand why this is such a massive drain, we've got to look at a fundamental financial philosophy, popularized by experts like Robert Kiyosaki. The rule is simple. An asset puts money in your pocket, a liability takes money out of your pocket. Now, we often proudly call our cars our assets. But let's be real here, unless you're driving for a living, a personal car is strictly a liability. I mean, it depreciates the second you drive it off the lot. It requires insurance, maintenance, gas, taxes, the whole shebang. It just continually drains your net worth day after day. But if the math is so incredibly bad, why do we all do it? Well, it really comes down to the societal pressure trap. We buy for status. We worry about, what will society think if we pull up in a 10-year-old sedan instead of a brand new flashy SUV? So we're literally taking out loans with money we don't even have, completely ignoring the mathematical reality of what it's doing to our future. We're going broke just to look rich to complete strangers we happen to pass at traffic lights. It's a total illusion, and it costs us our financial independence. So how do we fight back against the trickery and that intense societal pressure? We need a shield. Enter the 24-10 rule. Now, this isn't just a casual suggestion. I really want you to view this as a definitive financial principle. It's a holistic shield designed specifically to protect you from over-leveraging yourself on a vehicle purchase. If you apply this rule, you instantly block the dealerships from trapping you in those toxic, long-term, wealth-destroying loans. So the crucial point is establishing strict mathematical boundaries. First up, a 20% down payment. If you can't put 20% down, you can't afford the car. Period. This keeps you from immediately owing more than the car is worth the very second you drive away. Second, a 4-year maximum loan term. No 60, 72, or crazy 84-month loans. 48 months max. And finally, your total vehicle expenses, that's the loan, the insurance, and the maintenance, cannot exceed 10% of your monthly income. These parameters force you to buy within your actual reality, not a fantasy. Let's actually walk through a real-world scenario to make these hidden costs painfully concrete. Say you're eyeing a $25,000 car. Under normal financing, 0 down, 5 years. You're paying over $500 a month and an agonizing $5,400 just in interest. Now apply the 24-10 rule to that exact same car. You put $5,000 down, finance for only 4 years. Your payment actually drops to $488, and your total interest paid drops to about $3,400. And at the very bottom of the table, the cash route. A $5,000 used car paid in full. 0 monthly payment, 0 interest. That's peace of mind right there. And this brilliantly illustrates exactly what we gain when we take control of the math. $2,000. That is the bare minimal amount of money saved in pure interest just by shifting from that normal 5-year financing trap into the disciplined 20-40-10 rule. That's $2,000 that stays in your pocket instead of being handed over to a bank just because you wanted to stretch your payments out for 1 extra year. Crazy, right? To really visualize the pain of standard financing, think about where your money is actually going. When you finance that $25,000 car the normal way, you aren't just paying for the car. You're paying a massive $5,400 premium on top of it. You lose that money to the bank simply for the privilege of borrowing. It is wealth literally vanishing into thin air. You're paying a huge premium for an asset that is simultaneously crashing in value. It's a massive double hit to your net worth. Let's move to and see how this builds into the absolute best strategy you can deploy. The ultimate power move, buying a secondhand car in pure cash. As great as the 24-4-1 rule is for mitigating damage, this cash strategy completely eliminates the need for financing altogether. It requires fiscal prudence, absolutely, for sure, but it instantly stops the bleeding of interest payments and frees up your monthly cash flow to actually build real wealth, instead of just enriching a car dealership. Let's map out exactly what this looks like over 4 years. In year 0, instead of putting a down payment on a new car, you use that $5,000 to buy a basic, reliable used car outright. Boom, no car payments. Now from year 1 to 3, you take that $488 a month you would have been giving to the bank and you pay it to yourself. You save it or you invest it. By year 4, you have accumulated roughly $23,000 in cold, hard cash. That's enough to completely change your financial trajectory. Now, what's really interesting about this slide is the profound truth it reveals, which is perfectly summarized by our sources. By spending less now, you have the potential to afford more in the future while paying 0 interest. That, my friends, is the immense power of delayed gratification. In just 4 short years, by choosing to drive a basic car today, you've built the massive purchasing power to buy a beautiful $23,000 vehicle in pure cash tomorrow. You win the game by literally refusing to play it the way the dealerships want you to. So as we wrap up this explainer, I want to leave you with this final provocative thought. Will you choose the illusion of wealth today, going broke just to look rich at a stoplight? Or will you choose actual, real financial freedom tomorrow? The math is entirely in your hands. If this explainer changed the way you look at your money and you want to keep building that financial IQ, make sure to hit that subscribe button for more. We've got plenty more illusions to shatter. I'll see you in the next one.